July 4th, Thursday, this is Bitcoin TV's channel. I'm Zu, and let's first look at the 24-hour data headline sponsored by Bitcoin. Last night, Bitcoin fell below the 60,000 support level again, touching as low as 57,800, but failed to effectively break below the 58,000 support level. Currently, Bitcoin's seller risk ratio is below 0.1% at 0.089%. This indicates that market selling sentiment has reached a low point. Investor selling sentiment is starting to decrease, and there is a high probability of forming a balanced trend with the bottom buying sentiment. When the seller risk ratio reaches 0.75%, it indicates that market prices are overvalued and investor short-term profit-taking sentiment is high. Therefore, from the current perspective, there will be a slight bottom buying sentiment in the short term to hedge against seller sentiment, and Bitcoin prices will receive slight support. Currently, multiple on-chain indicators show signs of weakness in Bitcoin prices. First, the long-term holder inflation rate is approaching the critical value. Bitcoin's long-term holder inflation rate is steadily rising, approaching a critical value of 2.0, which usually represents a high probability of reaching the top in the market cycle. The current value is 1.9, indicating increased market pressure. At the same time, the spending volume Bitcoin held for 7 to 10 years, that is, the amount of on-chain transfers suddenly surged. A large number of Bitcoin was transferred on-chain. Data shows that 138,000 Bitcoins were transferred on May 28th, and this behavior may lead to selling, so the market selling pressure remains on alert. At the same time, let's look at another data point that has reached a turning point: unrealized net profit loss. This data very intuitively shows the ratio of current market unrealized profits to unrealized losses. As long as the NUPL value is greater than 0, it indicates that investors are in a profitable stage. The latest NUPL data is 0.494, which has already touched the critical midnight of 0.5. The last time it was below 0.5 was in February. Below 0.5, NUPL enters the anxiety and panic investment sentiments range. Currently, it's still at a critical gain position. The market's profitable chips have gradually decreased and market sentiment is slowly changing. In the short term, profitable chips decrease and the market selling pressure decreases. But in the medium term, once support is lost, some profitable chips will accelerate their exit, and short-term losses will also be stopped. At that time, the NUPL index will obviously decline. Alright, please like and follow us. Will help you sort out the news closest to money in the crypto, blockchain, and mining industry in the past 24 hours. Originally, the market expected Bitcoin to rebound in July, but the market's optimistic sentiment was dosed with cold water yesterday. Yesterday, around 6 p.m., Bitcoin plunged to $59,570. Although it briefly returned above 60,000 afterwards, it fell further this morning around 5 a.m., reaching a low of 59,375. In one night, it fell below 60,000 twice. It even dropped to $57,000, hitting a 2-month low. Under Bitcoin's repeated washing plate trend, according to CoinGlass data, in the past 24 hours, the liquidation amount across the entire crypto market exceeds 220 million, with nearly 90,000 people being liquidated. So what's the real reason for this drop?
Capriole fund founder Charles Edwards posted on X platform in the evening, citing Bitcoin's on-chain movements to speculate that the main reason for this drop is very likely due to the exchange Mt. Gox starting to repay creditors Bitcoin, thus triggering market selling pressure. According to the chart, a large amount of Bitcoin is being transferred on-chain, 10 times higher than the previous peak, reaching $9 billion. However, the Bitcoin in Mt. Gox's wallet has not yet moved.
We have no idea the schedule. It could be spaced out over months. My point is, we've already dropped $120 billion in market cap over the last week, even at a 40x multiplier. It's not only priced in, it's massively overshot. This is a massive buying opportunity.
Mt. Gox, once the world's largest Bitcoin exchange, was hacked in 2014 and lost 850,000 Bitcoins. Now, after 10 years of bankruptcy litigation and several delays, compensations is finally underway. It's expected that by October this year, Mt. Gox will pay 142,000 Bitcoins and 143,000 BCH to creditors. However, Galaxy Research head Alex Storm commented at the end of June that he believes the final Bitcoin selling pressure caused by Mt. Gox will be less than expected, but BCH, due to its small liquidity, may see a more severe drop. Additionally, at 9:41 p.m. yesterday, Grayscale transferred about 213 bitcoins worth over 12 million to Coinbase Prime address. It seems that the selling pressure will continue. Currently, this week's trend may only continue to move sideways, waiting for significant market shocks until some convincing narratives or constructive progress appear in cryptocurrencies. Since the pandemic, the Federal Reserve's floodgates opening has led to persistently high inflation in the United States over the past 2 years. On July 4th, the Fed released the minutes of the June Fed Open Market Committee policy meeting. The minutes showed that participants generally believed that it was not appropriate to cut rates now, and more favorable data was needed to make them more confident that inflation was persistently moving towards the 2% target level. Some other officials pointed out that if inflation remains high or rises further, rates may need to be raised. Yesterday, Bitcoin fell below 60,000, dropping more than 3.5% intraday. As Bitcoin prices fell, liquidations in the cryptocurrency market surged to their highest level in a week. So does the Fed's decision not to cut rates and possible rate hike policy mean that cryptocurrency price will continue to decline?
Yesterday, the prices of Bitcoin, Ethereum, and Solana all saw significant declines, and the liquidation volume in the cryptocurrency market surged to its highest level in a week. CoinGlass data shows that in the past 24 hours, over 74,000 traders were liquidated, amounting to $208 million. Most of this, about $184 million, hit investors holding long positions. Of this, $54.9 million of Bitcoin long positions have been liquidated. The data also shows that Ethereum investors suffered the largest liquidation amount of $55.5 million, almost entirely long positions.
The U.S. elections is in full swing, and topics surrounding the statements of the two presidential candidates, the Federal Reserve's monetary policy, and geopolitical situations are expected to continue affecting cryptocurrency prices in 2024. Previously, when the U.S. June CPI data showed inflation cooling beyond expectations, greatly enhancing expectations for rate cuts, Bitcoin's prices surged significantly, breaking through the $70,000. However, as the Federal Reserve Chairman Powell's speech and the published minutes show that there would be no rate cuts in the near future and there might even be rate hikes, the market gave a quick response. The overall market downturn and a pessimistic sentiment towards monetary policies are undoubtedly affecting the market sentiment of cryptocurrencies. However, the long-term impact of this negative news remains to be further observed. The S-1 forms the second part of the two-step progress for ETF listing. The first part is the Issuer 19B4 form, which was approved before the crucial deadline in May. However, the S-1 is not subject to any specific deadline, and it depends on how quickly the SEC can complete these forms. Although there were reports that ETF could be listed as early as July 4th, this is no longer possible. So the issuers still don't know when the ETF will be listed. The SEC chairman also didn't specify a time, only saying it would be approved. So isn't this just making empty promises?
ETF issuer Bitwise submitted the S-1 form for the Ethereum Spot ETF before the U.S. Independence Day holiday. Bloomberg analyst James Seifert believes that other issuers will submit successively later this week, and the Ethereum Spot ETF could be listed as early as next week. James also stated that because there is no deadline regulation for the S-1 form, he is not confident in his prediction date for the Ethereum Spot ETF listing. While waiting for the U.S. SEC review, Bitwise hasn't been idle. They have continued to launch a series of advertising campaigns for the Ethereum Spot ETF.
Big finance. Did you change?
What? No. I'm always like this. You want to hang out? When moon, man.
The key to the Ethereum ETF lies in the fees of various institutions. This time, Bitwise added a fee waiver for the first 6 months in this update, up to $500 million in assets under management, but did not disclose the fees afterwards. Van Eck also added a fee waiver to his Ethereum ETF last week with a fee of 0.2% after the promotional period. Another disclosed one, Franklin, is 0.19%. So now that the changes have been made and resubmitted, so why is SEC still wasting time? The road to listing Ethereum Spot ETFs is destined to be not smooth sailing. So facing the dual pressure of market expectation and SEC receival, ETF issuers like Bitwise need to maintain sufficient patience and perseverance. All we can do is wait quietly. It takes a long time for a person to learn lessons from all their mistakes, and many people say that everything has two sides, but in a trading market, there is only one side, not the bull market side, not the bear market side, but the correct side. This market has always been one generous success, 10,000 withered. It was like this in the past, it's like this now, and it will be like this in the future. So it's the same throughout history, both in China and abroad. Alright, that's the main content of today's program. Our channel focuses on curating valuable news in the crypto industry, blockchain industry, and mining industry. We have news information and in-depth search special reports. If you find our channel valuable, please forward and follow us. You can also become our member. So let's get rich together, adding a zero to our assets in the bull market. See you tomorrow.